Hi everybody, this is Gary Dean, and this is our video report for Thursday, February 11th, 2016. I'm feeling a little bit better, but I'm just physically exhausted. So I'm gonna, get through this, and I have a feeling tomorrow I should be at least 75% back to normal and being able to see things a little clearer. But markets were all over the place today. I still am on the side that we're forming some type of bottom here, and I had it labeled that it was here. This was the A, and this was an A, B, C of a B. It like I was saying, as far as the overall exact pattern, it doesn't really make that much of a difference. I'm still looking at this as some type of wave A. Now, the fact that we made a lower low here than this low that we made back in on January 20th gives us a daily bullish divergence. So we have a daily bullish divergence on the daily here. I'm still, we're pretty oversold right here. I'm still waiting for, anticipating some type of wave B could take us, all the way up to closer to the 2000 level. I know it sounds crazy, and it may not be correct. It's just the pattern that I'm following right now, and why I think it's going to play out. But the wave B, and then once that completes, there will be a wave C that will most likely take these lows out. So the daily charts, we have a bullish divergence here. If I go to a 60-minute chart, we have bullish divergence here. We had a low, made a lower low. See the price oscillator made a higher low. Very oversold again. And obviously this it went a little bit lower than that. But the ABC pattern that I had, it still could be there. It's just going to take a different type of formation. But like I said, it doesn't. This ABC is not really important. The important one is whether this A is here and it's the larger B that I'm anticipating is going to follow. So we have bullish divergences on the 60-minute chart. We have bullish divergences on the daily chart, and we have bullish divergences on the 15-minute chart. And if we look at the 5-minute chart, we have bullish divergences on there. So every time frame we have bullish divergences. So it's telling me that pressing the short side, yes, it still could work, but the Nasdaq was outperformed today, and we saw some buying come in. I just think you're pressing the short side from here is you're asking to get caught into one of those short covering rallies where you see the S&P up 45 points, 50 points. It doesn't make any sense for why it would be up that high, but it's just when people get caught on the wrong side, that's what happens. And we know, I know a lot of people are bearish on this market. I'm getting, emails from, what wave counts are here and where it's going. When I start seeing that, and I start seeing, this is how easy it is, it's going to go to here. Yes, it could. Heck, there's been plenty of times when the majority's been right, but it's a lot of times it just doesn't happen that easily. And when everybody believes they know what direction it's going and where it's going to turn and this and when, they get washed out, and then it makes things a little difficult. So again, I'm not saying that's going to happen. I'm just saying, when you have, some buy signals on every time frame, I don't remember the last time I've seen this, but we have this right now. So if you take a look at the 60-minute chart, really, if the bulls can push it through this 1850, should have a pretty easy run up to the 1868, possibly up to the 1877. Above that, then we're going up to the 1990. Again, I'm not ruling out that we're going to come up and close this gap before we have the next move down, but again, nothing is certain here. I'm not one of those that's going to pound the table and tell you this has to happen. It's a stock market. We take educated guesses on what's going to happen based on the tools that we use. And to me, this seems like this could be the correct move. So if really the main objective of the bulls to even think about these targets is to break above these previous highs, and that's at the 1884 level. So if we look at a 15-minute chart, we have 23% retracement as well as a moving average at 1842. So short term, this is where the bulls have to get above. And then you look at the 1862 and then the 1878 level. On a 5-minute chart, you can see we're pretty overbought right here off of this big jump. So if we get a pullback, you really want to see, the bulls try to defend the 1822 and possibly down to the 1817 to maintain, that they're going to try to push higher. But right now, like I said, there's a lot of bears out there. Nobody's really looking higher. We have, buy signals on every time frame. So I think that the next bigger move from these levels is to the upside. Let's see what plays out. And with that, have a great night, and I'll talk to you guys tomorrow.